Hi traders, welcome to your daily market update for Thursday the 2nd of April 2015. It's the second last trading day for the week where the markets will be open and will be trading Friday, but many banks and institutions, trading houses around the world will be on public holiday due to Good Friday, and that means liquidity dries up and price movements can be quite large, but they can be erratic, and I don't recommend trading for the novice. But overnight we had some price action moving around and it's been quite interesting. It was quite an active night with a fair bit of information, and the market's had a lot on its mind with oil rallying 4% on the back of concerns of the US doing a nuclear deal with Iran, and there was a lot of speculation there. So we'll have to see what follows on with oil, but commodities across the board just rallied, and that was really a risk adverse move where the markets were jumping back into gold and things like that due to some weaker expected data as well, and everything that's going on around the world. So it got quite a big boost. Now we had some dairy auction prices that come in 10% lower than normal, and that initially pushed the New Zealand dollar lower. However, we have had a weak US session, and the dollar dipped on the back of softening economic reports across the board. So we had weaker than expected numbers in ADP employment, manufacturing. So the risk is to the downside for the non-farm payrolls, and we could see an extension of the pullback, because we'll have a look at the dollar index chart in a minute, but everything was negative in terms of the data, except for we had some Fed ministers coming out and basically saying that they are still looking for a rate rise somewhere between June and September. So that offered a little bit of support, and if we didn't have that, I think the sell-off in the US dollar would have been a lot larger. So we've heard recently from Janet Yellen, Fed Chair Stanley Fischer, Dennis Lockhart, Jeffrey Lacker, all saying that they're optimistic about the outlook for the US economy and that they see a rate rise at some stage this year. From September seems to be the common denominator for all of them, and we'll have to wait and see. Now, the market is really hanging on to that, and if it doesn't look like becoming the case, the sell-off in the US dollar could actually start to follow through. So we'll have to keep an eye on that. We had bond yields drop 6 basis points as the investors actually become not quite as convinced as the currency market that they're going to raise rates. So the bond markets aren't quite as convinced, but the US dollar index actually held up okay. Before we move into some charts and talk about that a little bit further, today we've had Australian trade balance come out a little bit better than expected, and imports and exports were flat. That's not too bad. This data is actually positive for the Australian dollar, because we've seen the trade balance get a little bit less, but exports and imports have been quite a worry, as it's a very important factor of the Australian economy, being exports mainly iron ore and other commodities. So that's not a bad result, and I think that'll offer some short-term support for the Australian dollar, but the market's still focused on the US dollar, and that will overrule anything that comes out of Australia, that's for sure. But focused on in the European session is the PMI construction for the pound. Now, if this data comes in weak as expected, I think that will weigh on the pound, and we could see further losses there, because we've seen some good data come out and it failed to push the dollar higher, the pound higher. So any weak data should definitely be taken on board, and the market should grab onto that. So we'll keep an eye out for that, and there may be some trading opportunities there. Looking at the CAD, we do have some export numbers coming out, and that will be focused on by the market. But I think the Canadian dollar tonight will be controlled by oil and the US dollar. So this data will be taken into consideration, but probably only in the short term, and not create any major trends or any themes in the market, that's for sure. Later on in the US, we do have some important data. We have the initial jobless claims, continuing jobless claims, and trade balance. The market's really heavily going to be focused on these figures. They're trying to get an indication for non-farm payrolls. And right now, for my money, I think the non-farm payrolls could actually come in short, because the data that we've had coming up to date hasn't been impressive enough to see a big figure. But I'll talk more on that tomorrow's video. But for now, this data here will ultimately set the theme for the US dollar index leading into tomorrow. I mean, we could see if they come in weak, the US dollar support could actually start following the bond markets and come under a bit greater of an extension of a pullback. Now, that's in the short term. In the long term, I'm still a US dollar bull because they will be raising rates first. And that is a huge side better than anyone else in the world. And with great reason, the US dollar needs to be stronger than any other economies because of the performance. So we'll keep an eye on that. The ECB monetary policy, that's a big one. I think we could actually see some pressure on the euro. And I think that they're going to be dovish and they're going to be talking about all the stimulus that they're doing. And ultimately, this meeting could lead to the euro going lower. But we'll keep that in the back of our minds and watch the policy. And I'll be producing some commentary on that as we go on. And as you can see here, Good Friday on Friday. Non-farm payrolls is expected to be lower, but we'll wait and see on how much lower it actually turns out to be. Anyway, let's get over to the dollar index, and I've got it on the hourly chart, and this is just to show you the sideways stall that we've had of the rally. And this is the weak data that we had last night out of the US, and then we've still managed to hold a little bit of support here, but we haven't got any momentum, and this could actually give way, and we could extend our pullback even further should we get weaker than expected US data. Now, I'm not saying that that's going to happen just yet, and I'm not exactly sure what's going to happen if I'm honest with you, but what I do, I like the market to tell me where it's going to go, and I'll keep an eye on some certain key areas and rates and levels and price action. And for now, we are in a sideways pattern, and I need a break out of that before I'm willing to put any money in the market on a particular direction. If I have a look at the daily just quickly to show you, sorry for the delay here, but you can see that we did have a little negative day. We've had a pretty good bounce, but we've stalled, and we could actually have a bit more of a pullback. So we'll have to wait and see what happens in this area here, and that's going to play out tonight. And just keep your wits about you is all I'm really saying, and the news is going to come into play. Let's quickly get over to some charts. And we've seen a big fall in the New Zealand dollar, and that was on the back of the dairy prices, but then we've since had a bounce due to the US dollar news that was quite weak. And we bounced off 74 cents. If I go to a 4-hourly chart, maybe it's a bit clearer. We bounced off 74 cents, and then we're now having another run. And we could make a run up to 75 cents. So we could move into a consolidation pattern until the US dollar makes its move on Friday, and we could get quite a wild move, and all the currency pairs could really just break out of their current sideways range-bound patterns that we've seen in the last trading session. So this area here is quite a choppy area, and just be careful if you're trying to trade it. I don't think I'll be looking for anything now. I was hoping that this break was going to continue with some stronger than expected US data. We didn't get that, so now we are in a holding pattern. The Australian dollar is not quite the same in that we fell and we didn't have the bounce that everybody else attributed to the US dollar having a pullback. So we are very much still in a downward range. We're still below 76 cents, and we're not looking for anything bullish at all. If I look at the 1-hour chart, you can see it's still just sliding. So right now, the Australian dollar, whatever it's below 76 cents, and even sort of really below 78 cents, is still in bearish territory for my eyes. The euro had a bounce, but we are ultimately in a trading range. As you can see, had a bounce. Now this was on the back of the US dollar index and better than expected data that we had coming out last night out of the euro, out of Italy, Germany and France. So it's with good reason that we did have a bounce. But the bounce failed to follow through and break above $1.08. We had the bounce and then we failed, and then we had poor US data, and then we had another run and that failed. And then we've had another run, and that failed. So now we're into the Asian session and we haven't done a lot, but we could make another run for $1.08 and it could fail. But for now, we are definitely in a consolidation area here. It's a very choppy market. If you want to trade it, just keep your equity management rules really tight and don't get greedy, because as you can see, it's just choppy. But we are making higher lows, so it doesn't look like we want to make a run up for it. And we'll wait and see what happens with the US dollar. A break below 107 would definitely be a good indication for me to jump in short. The Great British Pound is more bearish than the Euro, and we've failed a few times to go higher. We've got a few indecision daily candles here. The market doesn't know where it wants to go. So if I was just to zoom out there a little bit, you can see that we have just chopped around in this band here. A break below this level would definitely indicate lower, and I think would need to get above 149 before I'd call it a bull. So wait and see what happens tonight. Tonight we could push around in this area, but we may remain within this range bound until non-farm payrolls come around with poor liquidity and things really heat up. Now, we had a big pullback on the US dollar versus the CAD, and that's with good reason, as the oil rallied 4% and the US dollar was weaker on weaker data. So this is a very clear candle formation here with the three candles, the bullish. We've got an indecision candle and a bearish. Does indicate that today it does want to continue to go lower. It's one that I do expect to go lower. I expect it to break below $1.26 and move into this area. And then once we get down into there, it's really subject to the US dollar and oil, what happens from that point on. But definitely for now, $1.28 has failed to be broken, and we're still within a consolidation. The US JAP come off, and that's just purely attributed to the weaker than expected data coming out of the US last night. But we're still holding major support levels. So if we get a solid non-farm payroll, this sideways pattern that's been, the market's gone nowhere now since December, we could break out of that and start moving higher if jobs absolutely shoot the lights out and we get a lot of volatility. But we'll have to wait and see. But for now, consolidating. So that's it for me today. Be safe out there, trade well, and I'll be back again tomorrow for a Good Friday report before the weekend.